Okay, Frank.
Yes.
The world seems to be obsessed with numbers and seem to see numbers as real things that determine our existence. And if we don't get the numbers right, everything is going to fall apart. And I think this shows us that globalization is at a new, approaching a new landmark. I think we're going to soon become aware of the fact that numbers really aren't what we think they are. They're, in fact, they signify something different from what they are. The idea of debt, people feel there's something dishonest, insincere, even criminal about debt. And I think that's the only way I can explain the behavior of some of our representatives in Washington. Mm-hmm. Why else would they be against increasing debt? If you've got larger numbers of people, why shouldn't you have larger amounts of debt? Mm-hmm. What, after all, does money, what do the figures stand for? The figures stand for money, and the money represents relationships between people. So if we've got many more people now than we had when it was determined that we should have up to $15 trillion of debt. I suppose that was the figure that was decided on last.
Yes.
Now we've got a few billion more people. I'm not sure how many there were when that figure was decided. Obviously the size of the debt should be allowed to be bigger. But I'm not even sure that there should be a ceiling anyway. Because I think that the amount of debt we need in the long term is going to be determined by the number of people who are interrelated by financial relationships. Mm-hmm. Does that make sense?
Well, there's a couple of points that are raised by your analysis. The first, obviously, is the specter of economic turmoil that could well result if the United States does not raise its debt limit, which of course would imperil the AAA rating of the U.S. sovereign bonds in which much of the world's reserves are held in. Now, as you have pointed out in the past, the geopolitical ramifications that could result from that, i.e. the strengthened yuan, the strengthened euro, for that matter, the strength in any other currency that's relatively stable, would result from that, as would presumably a tremendous dip in the U.S. equity markets, which would lead to a worldwide dip of the global equity markets. But I couldn't help but think a little bit about, when you were talking about that, about what our mutual friend Ed Peters would always talk about when he would examine the development of economies and ownership assignations, whether it be in values of a currency or gold, in the times of the very early medieval period, or almost like the Italian city-state period. Because, as you know, the Christian West had very strict prohibitions against usury, which at the very beginning, and not the very beginning, but I mean even until maybe the 12th century, essentially meant a complete barring of any interest payments. Any interest payments, all right, even a symbolic peppercorn was viewed as a mortal sin. So as a result, debt was virtually non-existent, and it paralyzed the economy. And there are many theorists who have pointed to the rise of the Renaissance and the rise of the little boomlet in commercial activity that occurred in Italy at the end of the 1200s as being directly tied to a loosening and understanding, theologically at least, as to what could or could not be permitted under the usury statutes, which I might add were not only theologically based but also codified in law in many of the countries. So I find it interesting when you were talking about debt, and then you were talking about how debt is being interpreted today and what it might mean insofar as the going forward looking view toward debt. And I'm a little bit intrigued by that.
Well, it's particularly interesting that the Islamic world still insists that debt is, or usury, is illegitimate. but it finds a way around it, and the way around it that it finds has to do with social relationships. What the Christian world did was to project the usury outside the Christian world onto the people who were excluded from the Christian world, the Jews.
Correct.
Which complicated very much the relationship between Christians and non-Christians in a way that obviously extends into the present. So there's been this. I would see this resistance against usury as part of the general tendency to resist change, because as the world was getting more and more prosperous in the medieval period, there was need for more and more money, or more and more exchange, and there was need for new ways to facilitate exchange. And debt is the easiest way to facilitate exchange. As you probably know, anthropologists have been interested in debt for over 100 years, since the idea was very interestingly formulated by a French sociologist who has been very important in anthropological thinking, who suggested at the time that debt is in fact the essential core of all human relationships. I do something for you, you have to do something for me back. And to begin with, it was not monetary, and it only became monetary at a particular stage of social development when societies got beyond a particular size. And as they got bigger and bigger, people started to worry about debt, and there was resistance against the idea of debt, because some people were doing well out of it. But then in the modern period, especially since the Industrial Revolution, with the emergence of what we've come to call capitalism, even though we didn't invent that term for it until long after it actually started, the need to be able to count relationships over time in very detailed ways has become more and more important. You can only do that with money, and you can only do it with money if you allow debt. So that's why the Rothschilds became so crucial to the way the world was developing in the middle of the 19th century. And we've had to find new ways of doing it regularly ever since then, and the Big Bang in London in the 1980s is the latest.
Well, then let me, if I may, ask a question. Given that resistance that most people have to change, and if the proliferation of debt has been such, as you just accurately noted, I believe, over the past 50 or 60 years, certainly since the end of World War II, has been such as it's been, what would happen if artificially misguided people, depending upon your viewpoint, in Washington end up putting the brakes on one of the most plenary debt functionalities in the world's history?
We'd find all the social relationships that we were counting on internationally were suddenly up for grabs and would have to be re-thought out. The basis of the current calculations, which is the dollar as a reserve currency, would have to be reconsidered. China, which has been shopping for debt all over the world, as well as creating a lot of debt of its own, is going to have a privileged position in this new renegotiation, which is going to be a very interesting situation on a global scale, because after all, China has serious political problems, not that other people don't as well. All countries have serious political problems, but China's are problems of a particular type. But it is economically organized in a way that is very different from the way most other countries in the world are organized. And they have some very clever financial operators managing the Chinese system.
That kind of disruption in social relationships that could occur, that you referred to, that would be occurring, crudely put, if you will, from the top down rather than globalization from the bottom up, if I may say that.
I think that it's the general umbrella for the way the world as a whole is organized would suddenly be rent. There'd be a lot of tears in it, so that things would have to be rethought out from, not from the top down, but from maybe somewhere in the middle in both directions. Because money, different currencies are going to change value in relation to each other. And what countries owe each other is going to have to be renegotiated, and to some extent, of course, that has started already in Europe. And this would simply be an extension of we'd look back on it in a decade's time or so as an extension of what's already happened in Europe.
So very much so. The sheer fact that these mechanisms and facilities exist to be able to even have these negotiations and restructuring are emblematic of the increase in globalization trends over the last 50 years. I mean, it wasn't that long ago that people would be fighting wars over things like this, yes?
Yeah, and I think that in fact what will happen if the US were to default at the end of this month is that it would be create a spurt in the rate of globalization, because a lot of things would have to be thought out very quickly in order to keep things going. And if the debt ceiling is just lifted a little bit, which is probably the most likely thing to happen, then they'll simply be putting off the next stage of globalization when the whole system is lifted to a new level, a new level of global integration. Because the dollar cannot really continue to serve the same purpose as it has been serving since the middle of the last century. And we've already seen that America is losing its international place, and the continuing role of the dollar is part of the way things used to be. So it's pretty confident. I think I can be pretty confident in projecting that the dollar cannot continue in the way it is.
So if the economic turmoil that we're talking about, which I think most analysts agree, except for some hard right-wingers perhaps in the House of Representatives, occurred as a result of a U.S. default, this would definitely have not trickle-down effects, but tidal wave down effects to 401k holders, to European merchants who might be waiting for payment, Asian merchants, I mean, all the way around. It would impact just about everybody, even down to the smallest village in Asia or Africa or Latin America.
Because it's going to change prices.
Very quickly.
It's when it changes prices that it extends down to the lowest levels of participation in the global system. So I think the lesson we have to learn from this is that numbers are not the real thing that we have come to think of them as being since economists achieved their current status in the curriculum 100 years ago or so. But they simply represent something else, and we tend to get far too concerned with the numbers themselves and forget the relationships that underlie them, which are what really have to be managed.
On a global economy of the scale we're talking about today, I mean, how extant, in fact, do you think those relationships are? I mean, to a localized consumer at a street level.
Well, I would say that if we hadn't developed the numerical system and spread it across the world as we did in the course of the last 300 years, we wouldn't be able to manage a global financial system in the way we can now. And we're so impressed at having been able to do this that we think of the financial system as being the reality, rather than what we're in fact using it to achieve. So I think that we're on the verge of beginning globalization 3.0.
It's not entirely out of the realm of possibility, because obviously all of these credit default swaps that caused so much difficulty in the past 3 years were simply notional instruments. They were purely inventive, simply imaginary, based on things that could or could not happen. People didn't even have an actual interest, an insurable interest or a stakeholder interest in the underlying event.
Yeah, I think that's the end of our session for today.
Well, thank you very much. I look forward to continuing it in the future.